Hey there, Build Wealth Now News, or BWNN. Welcome back to another live episode of Market Pulse, your no BS data-driven market show. I'm your host, Billy Bob, and joining me today is our market wizard, Sarah, CFA, CMT, and the only person I know who can explain free cash flow while sipping cold brew. Sarah, how's the market treating you this morning?
Thanks, Billy Bob. And it's treating us well. If you're positioned right, we're seeing a fascinating divergence. The broad market indices are consolidating after the Fed pivot, but underneath, there's a massive rotation happening into sectors that aren't just reacting to rate cuts. They're powering the next industrial revolution.
You mean AI, right? Everyone's talking about NVIDIA, Microsoft, Meta, but you've been drilling down on something deeper. The infrastructure that's going to keep those data centers humming 24/7. Let's talk utilities. What's the big picture here?
Exactly. Think of it this way. AI isn't just software. It's steel, concrete, copper, and kilowatts. A single AI data center can consume as much power as a small city, and we're building hundreds of them. So while everyone's chasing the chip stocks, we're looking at the power stocks, the companies that will literally turn the lights on for the AI era. That's why we've been focused on the utilities and power generation sector, especially companies like Quanta Services, PWR, and Centrus Energy, LEU.
All right, let's break this down. First, what's the macro backdrop? Are utilities even interesting right now?
They're not just interesting, they're essential. The S&P 500 Utilities Index has outperformed the broader market over the last 18 months. Why? Because when interest rates peak, defensive sectors like utilities become more attractive. But this time it's different. It's not just defense, it's growth. The AI boom is creating unprecedented demand for electricity. We're talking about a multi-decade build-out, and utilities are the backbone.
So it's not just safe dividend stocks anymore, it's critical infrastructure plays.
Precisely. And within that, we have two very different stories. One is a mature cash-generating giant, Quanta Services. The other is a hyper-growth, high-margin disruptor, Centrus Energy, LEU. Let's start with Quanta Services, PWR. Tell me, Billy Bob, what's the first thing you notice when you look at its chart?
It's smooth, like butter, up and to the right for 3 years. No crazy spikes, no collapses, just steady, relentless growth. From $65 to $449, that's a 7x run. Looks like a stock you buy and forget about.
That's the textbook definition of Phase 4, operating leverage. This is a company that's already scaled. Look at the fundamentals. Sales per share is $180. Massive. Earnings per share is $6.70. Profit margins? Thin. 15% gross, 3.8% operating. But here's the kicker. Free cash flow per share is $8.40. That's higher than its earnings. That means for every dollar it earns, it's converting nearly all of it into cash. That's operational efficiency on steroids.
So it's not about flashy margins. It's about turning revenue into real usable cash.
Exactly. And that cash is funding dividends, buybacks, and strategic acquisitions. The current ratio is 1.3, quick ratio 1.2. Adequate liquidity, not excessive. This is a company that doesn't need to borrow to grow. It's self-funding through its own operations. Technicals? The 3-year, 3-day chart shows a consistent uptrend with shallow pullbacks. It's a momentum stock, but a reliable one. When you hear utilities, think boring. But PWR is boring in the same way a Swiss watch is boring. It just works consistently year after year.
So Quanta Services is the steady Eddie of the AI power play. Now let's talk about the wild card, LEU, Centrus Energy. That chart looks like a rocket ship. From $10 to $436. What in the world is going on here?
This is where things get spicy. Centrus Energy is in Phase 2, hyper growth. And it's not just growing, it's exploding. Why? Because it's the only U.S.-based company licensed to produce high-assay, low-enriched uranium, HALEU, the fuel needed for next-generation nuclear reactors. These reactors are critical for providing the 24/7 carbon-free power that AI data centers demand.
Nuclear in 2025, isn't that risky? And what about alternatives? Solar, wind, batteries?
Great question. Let's be clear. Solar and wind are intermittent. They don't work at night or when the wind isn't blowing. Batteries help, but they're expensive and degrade. For AI, which needs constant, reliable power, you need baseload generation. That's where nuclear shines. And Centrus Energy is the only domestic supplier of the fuel for the new generation of reactors, SMRS, or small modular reactors, and advanced designs from companies like TerraPower and NuScale.
So it's not just about being nuclear, it's about being the only game in town for a specific critical fuel.
Exactly, and the numbers prove it. Look at the profit margins. Gross profit margin is 36%. Operating and net profit margins are both 24%. That's unheard of in energy. Compare that to PWR's 3.8%. Centrus Energy is not just profitable, it's highly profitable, and it's generating $6.20 per share in free cash flow. Even better, its liquidity is rock solid. Current ratio 2.5, quick ratio 1.7. This is a company with no debt problems, huge margins, and a monopoly-like position.
And the chart? It's gone parabolic. Is that sustainable?
Technically, yes, if the story holds. The price surge is justified by the fundamentals, but it's also volatile. That's the nature of hypergrowth. You ride the wave, but you need to be prepared for pullbacks. The key is to understand that Centrus Energy isn't just a stock. It's a bet on the future of nuclear energy and, by extension, the future of AI infrastructure.
So to summarize, Quanta Services is the reliable, cash-generating workhorse. Centrus Energy is the high-risk, high-reward disruptor with a near monopoly on a critical resource. Both are playing in the same mega trend, powering AI, but from opposite ends of the risk spectrum.
Perfect summary. And here's the bottom line. If you're looking for stability and consistent returns, PWR is your pick. If you want to bet on the future of clean, reliable power, and you can handle the volatility, Centrus Energy is the play. Both are essential to the AI revolution. One builds the grid, the other fuels it.
Sarah, you've done it again. Clear, concise, and packed with actionable insight. To our viewers, if you're investing in AI, don't just buy the chips. Buy the power. And if you want to dig deeper, check out our full analysis on Quanta Services and Centrus Energy in the BWNN members portal.
And remember, whether you're in phase 2 or phase 4, the key is understanding the business model, the cash flow, and the technical trend. Don't chase hype, chase fundamentals.
Sarah, thanks for breaking it down. Folks, if you like this deep dive, smash that like button, subscribe to BWNN, and drop your comments below. Sarah and I will be back with more market intelligence.
My pleasure, Billy. Stay smart, build your wealth now and not later.
BWNN is dedicated to research the businesses behind the stock names. Our research are done with artificial intelligence assistance using the best practices in the industry. The business phase growth chart is taken from Stock Simplifier. Please note that investing carries its own risk, and you should do your own research before committing any stocks to your own portfolio. Until next time, this is Billy Bob signing off from Build Wealth Now News. Trade safe.